Welcome, your final trade of the day of 2022, and of course, well, maybe not. It's going to be Apple. Yeah, trade of the day is going to be Apple, as always brought to you by Day Trade the World. Realistically, big tech has been a big story all week long, all year long. Apple just recently made fresh 52-week lows, so it was going to be in play. But when you have the final trading day, sometimes it can be a little lighter volume and somewhat range-bound. And we had some good trade ideas that had big breakouts, but it was this one where you had to have so much patience, and that's why I want to go over it for you. I always get the lay of the land on the higher time frames, so I'm starting with the 15-minute. So we'll show you nice little, well, I don't want to call it a nice drop, but you can see the drop from 130 that we had a couple of sessions ago, making that fresh 52-week low. What's the response to the big red day with the fresh low? You're able to hold the bottom and gap up. Now at that breakout, you had resistance here at about 127.75, channeled it, held as support, and then you broke higher. So it's this area here where it garnered support and broke out into the open that I'm looking for. Now, it was a red day today, so when we broke down in Apple, I wasn't really looking for that to be a long trade. What I was sort of seeing was the opportunity for a break down off of that level. So it was a 127.80, 75. That was the break on the higher time frame, that 15-minute. Once it took it out, it was just, I'm going short. Now, the first move down when it took that level involved some slippage, because markets just open, it was breaking major support. So you'll see I actually slipped about an extra 10 cents to get in. That just means you don't actually get the price at which you triggered your stop order. When you cross the market, you end up getting a price that's worse because there's less liquidity in that range. So I get slipped down there, and we get right to 127.50, and I mean literally 127.50. Buyer steps in, and it bounces. And this is all on a 3-minute chart. It comes all the way back up, wicks it. I'm like, okay, it's still pretty good, but let's see what happens when it gets back down to 127.50. Buyer bounces it again, so I get some out at 52. We come back upside, and I say, well, if it's going to be valid in this channel, the market's looking pretty weak here. Let's just rinse and repeat it and maintain the short position. So at this point, I'm just shorting 127.80, getting out scalp 127.51s and 52s in front of the buyer, and holding for a bigger flush, because my eyeballs are really just, we recover, put in a lower high, you break the channel support, let's see if we don't get that low from the other day. Now, obviously that doesn't take place. We have what I like to call, it's not really a capitulation candle, but what you get is another reload. It tries to run stops at the top, managed to hold through because it doesn't clear through 128, and then you get a big flush that actually breaks very briefly that 127.50. Now, I was already in front of it getting some out for the scalp trade, but when that happened, I'm thinking, it's go time. Now, if there's a mistake that got made, you guys can probably figure out what that might be. Nothing wrong with getting some out here because I was already holding for the bigger move down to 126. But once that kind of a candle happens and you've been struggling off that channel, I don't mind reloading it. It's how you reload. I don't need to reload it on the way back up because I get stopped out almost right away. Now, if you reload here, the way that I would prefer to do it and why I would do it better the next time is you allow it to get to 128. If it breaks 128, only get back in if it flushes into the downside. So it rejects a 128 break and then comes back and settles the range again, and then I'm shorting it on the way back down. That's because of the wick bottom it made and strong move back up. A lot of times it's that kind of nuance that'll lead me to say, you know, you don't always have to reload just because it's the resistance area. The price action's telling you something got a little bit stronger down there, that buyer's a little more legit, and they're respecting it more. Once it broke out, it just came down to our top end of the range, baby. That 129, again, the top end of the channel. I wait till we get there. I'm thinking shorts on Apple. You've already taken out the high, and then afternoon it is scalp zone. Off that 129, we're taking 20, we're taking 30, and then you get a huge flush. Now, I was sitting on VWAP when some news dropped. There was a big repo, and that caused the market to drop relatively rapidly. I was already on the bid. I got taken out at VWAP at that time. A bit unfortunate because I ended up giving up about 30 pennies on the move. However, when you have a flash move to the downside like that, if you hold previous resistance, wick bottom, I'm in long. Give it to the low of the day. I actually liked it and had to get more shares a little bit higher, but 128.15 long. You're giving it to 128 where it's bounced off. That's the same key level that we're stopped out before. Scalping it in through VWAP. It does give it up. And 2 days in a row now, as I'm doing the trade of the day, I can tell you the shares I have left on, I got to stop at 128 for break even, and I'm trying to kit some shares out right back at that high of the day to see if it can get there. Not sure it can, but we've got a key level for a couple of shorts that give you the opportunity to know where to get in, where to get out, how we could have done better, and even catching a bit of a market flush long using said levels. Apple gave you all of these opportunities, and that's why it's a trade of the day. Great learning experience, positive stock as well. And as always, hey, first off, have a fantastic new year, everybody. And if you want to get your day trading journey started the right way, check out Day Trade the World.